start. Hi everyone, and welcome to the panel discussion, Unlocking the Power of Technological Innovation for Carbon Trading. This panel is hosted by the European Carbon Offset Tokenization Association. In short, we are a think tank connecting bright minds like Alejandra, like Carsten, like Lucas, in and around the topics of regenerative finance, with a special focus on tokenized carbon credits. We want to provide you in the audience with the best possible education about this young and fast-growing industry. At ECOTA, we're passionate about the intersection of sustainability and blockchain technology, and we want to use this combination to achieve the net zero future for our panels. Now, panels like these are made possible by our trusted institutional members. Thank you very much for your support. I'm Max. I'm Executive Director of ECOTA, and I'm your moderator for this event. Before we start into today's topic, I want to encourage you in the audience to use our chat on YouTube. We prepared an agenda for this discussion, but I'm happy to talk with our panelists about your questions that you have in the audience. So feel free to use the chat at any time. The questions will get, I will read the questions and pose questions to our panelists here. So Alejandra, Carsten, Lucas, thank you very much for joining. Let's do a quick introduction round here. Alejandra, let's start with you. What are you working on and why are you passionate about regenerative finance?
Thank you for the invitation, Max. So now I'm working in ASES, Ecological and Sustainable Services. And as a biologist, I'm helping to bring the scientific perspective for the assessment of the nature-based solutions we certify the carbon credits for. And we're not certifying only carbon credits, but now we are implementing biodiversity credits, water, and soil credits. So with a scientific perspective, we can make sure that the impact is real and measurable and that the investors are getting what they are expecting to support.
So one of the actual applicants that applies novel technologies. Happy about your perspective on the topic. Carsten, let's go with you next.
Yeah, my name is Carsten Hermann. I'm CTO and co-founder of Particular. We're doing rating and analysis of tokenized real-world assets. So especially we are very strong in the ESG sector, and we're basically laying the foundation for institutional grade investments into climate projects.
Thank you, Lucas.
Yes, hi, I'm Lucas, and I'm part of Blocksays Climate, which is one of the co-founder of Verity Tracking, a solution especially looking at carbon emissions towards supply chains and value chains, especially when we look at value chains of biofuels, sustainable fuels, and materials, which are really important, obviously, for their low carbon value and the potential to decarbonize some of the heavy polluting areas of our industries or transport, for example, sustainable aviation fuel to decarbonize aviation. So we're looking at it with a transparency approach, supply chain transparency, and also unlocking the power of carbon trading as an inset toward the supply chain in order eventually to create an aligned incentives for all the players to further lower the carbon intensity of the materials, the fuels, the energy that we produce and we consume. So happy to be here. Thank you, Max, and everybody.
Many key terms already mentioned by Lucas that we hopefully will talk about in this panel. Now, I want to start this panel off with a perspective from my conversations that I have with institutions all of the time. So if I talk to big institutions that have a multi-million dollar or euro sustainability budget and they want to tap into the voluntary carbon market and also are interested in carbon credits, for example, if I talk to them about carbon credits in the voluntary carbon market, their mindset is sort of like, okay, it is like the oil market or maybe the gold market, so a large market with homogeneous underlyings. So one carbon credit is basically as good as another. And if I have some sort of, let's compare with the oil market, for example, if I have WTI standardized oil, for example, it doesn't matter where I buy it. There is a global price for it. If I buy it out of the US, doesn't matter if I buy it out of Europe, for example. So there's a liquid market where I also can hedge and de-risk my purchases of oil, for example, and of gold. Now I know, Carsten, you have a different view on how carbon credits in the voluntary market could be viewed. Maybe you can walk me through, do you agree, do you share this view that carbon credits in the VCM or in the voluntary carbon market. Acronym for the voluntary carbon market is VCM. If they are something that could be commoditized, like the oil or the gold market.
Yeah, I think in general it is possible, and we see definitely there's interest from not only from the corporate side but also from the institutional investor side. But we still have some challenges to solve. And I think, you know, when blockchain comes in right now, it's more like an additional layer. So yes, it can be transparent and very fast and reliable, but right now it's not actually not so transparent how we always marketing it. So in order to bring up or to build up this functioning market, we also need to make this new technology or this new technology layer accessible to the existing players on the market. And right now, we're a little bit developing next to them, aside from them, but we are not really trying to get also their challenges. And it starts with very simple things. So if you just want to look into a tokenized carbon credit, then the first problem is to check if the credit is actually, or the token is actually linked to a real project. So how is the ownership of this project and this amount of carbon credits being proven? And how can the viewer or the possible buyer access this information? Right now, it's completely hidden. So what happened right now is that using blockchain only made it more intransparent. And in order to fulfill the promises, we still have to work a little bit on it. And I mean, that's also why I'm basically on a daily basis trying to dig deeper on tokenized carbon credits and trying to understand, okay, how we need to change it in order to make it usable for existing players on the carbon credit market.
Now, Alejandra, let's transition this to you. Blockchain making it more intransparent, or maybe adding another layer of complexity to the entire problem. What is your take on this?
I think it actually brings more transparency. You said instant transparent, but no, in fact, blockchain brings more transparency because you can really track the transactions. Like, since the credit is issued, like as we do it, one for each credit we issue one NFT. So the NFT is recorded in the blockchain, and you can see the NFT's history, who issued it, from which project, where is the project located. You can go to the website of the project and see in the map the actions, and if you see Google Earth or something, you can actually see the trees growing. You can see who bought it and who, if it's retired, of course, it cannot be retired twice. So it cannot be claimed twice. So blockchain, for sure, is bringing more transparency for all the registry process. It's registry and trading.
Yeah, no, this is
So
I want to play this back to you, Lucas. Let me give you a framing on that, because this is sort of like the trading and the retiring part, or payments part of it. Okay, Lucas, and maybe I don't have to pose the question anyway, so maybe you can go ahead, but I'm interested in how can we use technology or novel technologies in, for example, the validation period of a project.
Yes, I will come to that, but maybe just to bounce, because we're talking about trading and Indian, right, the interest of a number of players, especially financial and institutional investors, to play in the market, which is very much needed, right? Because it's bringing funding that is needed for projects to emerge, and creating the liquidity for that. But when we talk about recognizing the singularity of a carbon project or an environmental or biodiversity project and making an NFT out of it, then we create an open sea market or an equity market where every asset is potentially a little bit different. And it's hard to see, right? Just referring back to your question, Max, about creating a commodity market. And there has been some attempt also in the tokenized Web3, right? With some marketplaces that have created basket tokens as ERC20 token standard, which are highly fungible and therefore tradable, in the way that it could, you know, we could see emerge high volume trading and price discoveries between buyers and sellers. And so I always see in that space, and I think we are all learning a little bit about that, this opposition between singularity of projects recorded using an NFT and complete tradability and fungibility with ERC20 instruments, right? And there are a lot of solutions in the middle. So at Verity, we're exploring semi-fungible tokens, different token standard, which actually emerged from the game industry, that actually always make sure that you attached metadata and origin back to the single project in your token that remains tradable in like an ERC20. Now the problem is, like, not every platform is allowing ERC20 on the tokenized carbon market. So it seems everybody is taking this standard but it's not yet in favor of the data traceability. And I think there's a little bit of back and forth and experimentation until everyone realizes, hey, maybe there are better standards to use. And that also goes in pair with the maturity of the tools themselves. You don't always have a wallet that's able to handle different types of tokens if they are non-ERC20.
And maybe just to add here at this point, because it's great that you mentioned this, yes, most use ERC20 as a token standard, but what about the data information standard behind that? So we looked at I think over 200 tokenized assets so far. And the problem is what you also described. In order to build the commodity market, we need to harmonize the data. We need to make it also comparable. And that's what we see, especially from institutional investors, that they look at all of those assets, but for them, it's really hard to make a comparison. What's the difference between this and this asset? Because right now in the market, I would say it's like pure Wild West. And we have many, many different silos. So everyone has like his own methodology, his own standard, and his own way of communicating which data is underlying, what's the underlying data of the token. And in order to make it understandable for someone who is not on a daily basis, like in this ecosystem, I think it needs to be a little bit more simplified, but in the first place, harmonized, so that we use always like the same properties for some kind of carbonized token, for example.
Yeah, I agree. I can add something about it. To see it as a commodity, we could talk about 1 ton of carbon, right? 1 ton of carbon is one in any place of the world. But what is behind the ton of carbon, the project that issued it, it can have environmental or social benefits, yes or no, how big, how important. And that part is not recognized too much in the 1 ton, in the 1 credit. Some of them have, and that determines their price, the type of project that they are issued from, renewable energies or reductions or removals or so on. But one idea that we had is also, that's why we created biodiversity credits, water credits, soil credits, because that can be managed separately. Sometimes people just want to buy the carbon credits, but there's more value in the projects apart from carbon.
I want to stick with your Alejandra for one more question, because I want to get back to the point NFT, for example. So if I talk to institutions and I mention one of these acronyms, right? NFT, ERC20, ERC 721. So my experience is that they are interested in this, but from a business perspective wise, this adds a layer of complexity that they are not comfortable with handling already. So if you talk to buyers, for example, or why, maybe you can walk us through what's your rationale behind issuing your tokens as NFTs?
Yeah, because they are unique. First, we were using a cryptocurrency. We also have a Natcoin, but Natcoins are like euros. One Natcoin is equal to one other Natcoin. So because carbon credits, one of the principles is that they are unique. You don't have, even if in a project you have 20 tons of carbon, you have 20 NFTs, but all of them are single. So each NFT has their own serial number. They are serialized, so that's why we use it.
So Carsten, so is the market just going to be heterogeneous, and I have to I have to build up a new team with like 3 sustainability managers who have a Bloomberg terminal for the VCM, and their daily job is just to scan carbon credits? Is this sort of like a future that we have?
Yeah, so I think that can't be the solution. So right now, with, like you said, with blockchain, we add another layer of complexity. There are many benefits, so don't get me wrong on this. I totally believe in using blockchain and a decentralized database for this market. But we have to prove that there's really an additional benefit for the users. And in my perception, the benefit is not to have a token that is linked to something else that exists already. The benefit would be really to prove or to record all the verification data on the blockchain. I think this goes in the direction of you, Lucas. And then to give the buyer or the investor the possibility to have full insights into the data that has been recorded, this on a continuous basis, because right now it's just like this initial verification, and then the buyer can buy something which may have been validated, let's say like 3 years ago. And you know, the whole VCM is already a little bit full of skepticism. There's been lots of PR, but lots of bad PR around. And when we just add blockchain and say, hey, look, now it's blockchain and it's more transparent, we really have to prove that there's this additional benefit. And I think this can only be achieved by adding more data to it and giving more insights, because right now, for the buyer's perspective, there's so many information hidden or really hard to access. And therefore, I don't believe that companies or corporates, they will employ just more people to get a better understanding of this additional layer. It's the opposite, that we have to make it more accessible, more easy to understand. And maybe, Lucas, I invite you to share something, especially about this on-chain data, because I believe this is really this kind of really game changer, where we as a whole industry and ecosystem can prove that we can add value to the existing VCM.
Yeah, so first of all, I'd say, to react to that I believe we're seeing a lot of innovation already in the carbon space when it comes to using the tokenization and blockchain. And yes, it's all about trust. And I think bringing data on chain and, automizing cooperation between third parties and different people who play a role in bringing or verifying data in the supply chain is a great example. But I think we have many others, in the way to create dynamic pools for trading market, in the way to simplify global exchange and payment and trading operations, but also in the way to ensure that we don't have double accounting with immutable registries on chain. So I think these are already a lot of great innovations. I'm also impressed that every week I discover a new project or a new startup that comes up with a new idea, right, to improve funding, maybe to come up with interesting staking programs, which actually make sure that all the money is going back to the project in the ground. So I'm really enthusiastic to see more and more reasons and more benefits for using blockchain in that space. Now, this being said, indeed, there's a big talk about digital MRV, or also decentralized MRV, as the activities of measuring, reporting, and verifying data when it comes to any environmental credit, in order to make sure we assess the impact and we can foresee or measure the impact when it's there. And so it's not just technology and blockchain that's going to give trust because we put data somewhere and then everybody will trust it because it's through a blockchain, right? It requires much more. It requires a set of partners, third parties. There is verification that needs to be attached to it. But I think the way we can organize, especially along supply chain with all these partners in a more decentralized and more effective ways, sometimes with tools that can completely cut down the cost of that process. That's something that's really, really interesting. And we see the growing role of oracles like Chainlink and others in that space. There are also companies that are really dedicated to channel climate data or satellite imagery data so that others can build on top. And I think we have yet to see that very emerging space mature and bring the real benefits. Will the rest of the world catch up? I hope. And again, I think it will not take technology only. It will take, ratings and education and awareness. And maybe one of the things that we have to do is not to come up and talk about blockchain first, right? But how we create transparency and trust first. And obviously, this is supported by many technology in the background. And maybe in the past, we've seen a lot of startups that came up with blockchain first pitch, right? And now they're coming up with value proposition first pitch. And then they can roll out, hey, by the way, this is how we do it. Maybe this is also helping to kind of bring more trust when you talk to more traditional players who, may still get a little bit scared, especially with the distance that there has been between traditional carbon registries and the tokenization some time ago. So.
And then also in this matter, to really unlock the power what blockchain smart contracts brings up would be also a new thinking or new mechanic that we have success-driven on-chain carbon certificate issuance, so that it's only based on values that have been on goals that have been met, instead of doing an evaluation in the beginning and then like doing an estimation how many credits will be saved over the next 20 years and awarding them, because that's why we have so many bad PR, because there's an overestimation of such projects. But when we turn it around and they're issued only based on what was achieved in this moment, like really live issuance, then I think we can reduce the risk for corporates massively.
Okay, I want to get back to...
Can I add something? Continuing the idea that was Lucas explaining about the digitalization of the MRV. And the World Bank with the Climate Warehouse is now working in an end-to-end digital process. So everything is going to be automatic and so on. But one part that is, in my perspective, critical is the digitalization of the methodologies. So as you say, Carsten, so we have the smart contract. If there is this data and this data, this happens. The smart contract is triggered automatically, but someone programs it, and the code of the smart contract needs to have a solid methodology, science-based backing it up. So what are we going to measure? What are the parameters we need to take into consideration? The natural variations of the systems. So that part, the scientific part that is feeding the smart contract has to be also quite solid.
Yeah, I totally agree. So in our case, we have some activities in the US where we're actually looking at a farm-to-flight approach, where we're tracking data from agricultural crops and residues that get turned into fuel and used as sustainable aviation fuel. And we do it with some major biofuel producers such as Gevo, based in the Midwest. And so we don't develop the model ourselves as a software solution provider for basically automating the life cycle assessment. We take the life cycle assessment from scientific sources, right? In that case, we look at the Argonne National Lab. They have developed a model called GRIT, which gives you exactly the emission factor, and it's based on IPCC data sources. It's very similar to what the EU is proposing for Renewable Energy Directive as a calculation model. But I think what's interesting is traditionally, a lot of consultants are using Excel spreadsheets around, collecting data manually, and they are still performing this lifecycle assessment manually. Now we have the way to automate data collection, treat outliers, data gaps, right? Inconsistencies in the data, add other proxy data like satellite imagery to verify the data input we got in the first place. For example, what happens on the field of corn, we can verify it from the space. And all of this is going to be fed into the smart contract that will run the lifecycle assessment model. And again, based on model that exists out there. So I think that we have ways to integrate that, but it's true, there are many projects that come up with their own methodology. And we see a lot of different things of different quality on the market. So the methodology, I agree, is a strong point. But we do have solutions.
Yeah, but it's actually exactly that what you're mentioning. This is really proving that there is an additional benefit. So, and the question is now maybe to challenge this also here in the talk, who can do a standardization of this kind of smart contractor information? Who will it be in the end? Will it be a centralized agency? Or maybe it's like, and that's what I believe, it's more like a community effort. And I think especially, Max, what you're doing like with ECOTA, I think that's definitely like one big step forward to just align all the forces together and then agree on a certain standard. And I think it just takes a while, but over time, we're getting closer and closer.
Yeah, maybe leverage the open network and open data way of doing, right? Public consultation, public review, peer-to-peer. There's also a very growing DeSci community, decentralized science, with a lot of great research institutes that are coming together and figuring out new ways to review scientific assessments and create methodologies together. I think the region network is also an example that leverage a lot of those. So yeah, we do have good examples. If I take the example of cookstove projects, they make up about 5% of the voluntary carbon market in terms of volume currently. Well, cookstove methodology can be very well designed. You can have a lot of scientists working on it for many years. One of the key parameters of the cookstove carbon reduction method, the calculation formula, is the percentage of use. So how frequently do you use a cook stove? And obviously, if you put 100% or 50% is completely different. And there has been some experimentation. If you look at most of the report on Vera and gold standards, the percentage of use, which is basically collected manually by local survey, is about 90%, between 80 and 90%. Now there has been experimentation where they connected the cook stove to data sensors, and the real use is about 55%. right? So who is paying for the gap between 55 and 85, which was actually, and this again is not a problem of the methodology in that case. It's a problem of how do you observe the, the real outcome and the real use of these cook stoves.
Data collection.
Yeah.
I want to get an impulse from the audience here. Arno asked a question, and this is also something that is enabled by blockchain technology. What do you think about a decentralized autonomous organization, so a DAO, for example, governing something that could be, I don't want to say the word registry because that brings up some images of the current structure of the market, but let's stick with it. Maybe you know where I'm coming from. So setting up this standard, for example, what do you think? Is that another innovation that blockchain could enable? Would that be helping the market?
Yeah, I think definitely yes. I mean, we see some first tendency towards this direction, like when you see like open forest protocol, their approach to really gather community of validators, and the project developer can submit the data, and a community of validators somewhere in the world is then evaluating it and gets rewarded. And I think that's definitely the future, to have like this approach instead of only a centralized committee who's overlooking it. And we see, especially in the blockchain world, more and more DAO powered structures. I would say maybe it's not always that kind of DAO, because there are also different types of DAO, and it really depends where the company is placed. Because if you have a company, for example, like in Switzerland, and you have like certain regulations you still need to follow, so it's not per se the case that then every shareholder of this DAO can also do the decisions, but definitely bringing up this community effort will make it much more fair, and we have much more different views together. So definitely yes. I think there will be many, many more developments like this. And in the end, it can only work if we have a network of professionals interacting together on this, instead of only a small group, and which is then direct in the market.
We also see the value of DAOs in another part of the process, in the verification, because we have third-party verifiers independent of the standard that is certifying. But DAOs can be also observers, for example, or it can even substitute verifiers. Like if the data is going to be completely open source and exposed, and all the evidence is going to be available for anyone who wants to check it and to verify, it would be possible that anywhere in the world can just see the data and decide and vote or give their opinion or rate it or something.
I think maybe one interesting area for the DAOs, and I think everybody made experience of DAO, and between the promise of a DAO and what it really is today, there are still some gaps. And also if you think about talking to a corporate and say, hey, that's a DAO, nobody's really responsible, and you can't maybe talk to one central person, but trust us, it's really really safe. I think we still have to wait a little bit to see adoption. But I think in a local community and how to manage local community in decentralized way, especially communities that can be involved in preservations, because local communities are the best to manage local natural assets and biodiversity. And again, you can generate much more social impact on the ground by empowering a local workforce and communities. I think we've seen a lot of great explorations of DAOs around community currencies, which maybe can be backed by natural assets, which are generating carbon credits. Collectivo has launched in Curaçao as one example. I think there are many more, and I definitely see that it's growing. There's a growing need, and that would be a really interesting area of applications for DAO. So really on the side of the project developers. Is a DAO able to cover the entire value chain, and again, win that trust, and maybe some counterparty risks and legal liability, which may be involved in some steps of the process where the legal status of a DAO is still unclear. I think we have yet to see. I haven't seen so many great mature examples of that yet.
I want to bring us back to the buyer side of things here. So the actual companies, for example, that want to integrate carbon credits. Now we've talked about, Lucas, you made this nice example of the cooking stove, for example. So if we integrate novel technologies to measure the success or the impact of a project, and then bring this onto an immutable ledger in form of a blockchain, for example, and we present this to institutional corporates, And now they get this huge amount of data, maybe like terabytes of data with satellite imagery, all of these data points for the cooking stove, for example. Do you think that corporates right now have the resources and capabilities to interpret this data and come up with a definition of a high quality or a good quality that they want to buy? Is it something, or is it something that they have to build out and that we have to need time for? Maybe let's start with you, Alejandra.
I guess it depends on the size of the corporate and on the specialties they have, like on the personal, if they have an environmental direction or something, they will have someone able to interpret it. If not, yeah, it depends a lot on the corporate. Yes.
Okay, suppose, let's stick with you. Suppose we ditch all of this data onto a small corporation that doesn't have the resources and capabilities. Do you think they will build it up, or do you think they will use a third party for this, for example?
Depends on the approach also. If they approach us directly, if they ask, if they go to our website and we're presenting the information like quite clearly in a public-friendly language, like click here, you see the project that you're supporting. Actually, our carbon ledger is like that. You see the registry, you see how many credits we have. You can click on the project name and you can get the project, get the name, the type of project, the information, the project developer. You can click and see where is the project located. You can see photos, the documents, you can find them there. So I think it's not that complicated to actually analyze a project.
Yeah,
at least
I would argue with
the
that.
experience of the kind of projects we have. Maybe for other projects like
but it's a matter of experience.
With biofuels might be different because
it's a matter of experience again, and how you bring it forward is like, do you need to crunch different hashes on IPFS and right, or is it rendered in a nice experience? You know, it's like maybe some of you experience, you know, Christmas gift for companies where, or like a few years ago, I was part of a company where basically the company offered to spend as part of the Christmas gift purchasing trees in a forest somewhere in a remote country. I think it was in Brazil. And so we were actually looking at different projects that are doing this, going on the ground and planting. And some of them offer you to send you a photo of that tree every 3 years, right? That was a different shading criteria for us, because we had the feeling that there will be more verification to it and we will be more connected. But again, it was rendered and presented in a good experience with good marketing and communication arguments. So that also has to be considered.
Yeah, and also, you know, I think there's not such a big difference between a corporate and an SME, because the corporate also has much more duties to fulfill in terms of sustainability. So we can't forget, we shouldn't forget that carbon offsetting is only one part of the whole corporate sustainability strategy. And the corporate sustainability manager, even like a chief sustainability manager officer, they have so much duties they cannot or they will not really dive deep into all the reports, because sometimes for a project you have a report about 30, 40, or even 70 or 80 pages, and then it's still hard to compare what's a good project and what is not. And most corporates, from my experience, they really focus only on one niche, so only agriculture, only direct air capture, only forestation, depending on what their business is. And still, what's also to be considered for this question, that not the chief sustainability officer is doing the final decision. So basically, the sustainability department is preparing the information and is like bringing up the foundation for a decision, but the CFO and the CEO are actually doing the decision. So that means you have so many shareholders who need to be involved and to be convinced about that this is a good project. And the actual decision makers are not the ones who really dig deep into what's written about that project. And therefore, the sustainability department needs to be able to communicate why this is a good project and why is it better than another one, and maybe why is it tokenized and what's the difference to a standard project, why is it certified. So therefore, it's really very complex. And what I experienced in the past couple of months or 1 year, talking and working with those corporates, is that they are basically totally overloaded with information. And as I mentioned, they have not the time and the energy to really dig deep into all the reports of all the projects. And I think that's, yeah, a big showstopper here, because it's too complicated to really understand those projects right now.
So maybe the work you will contribute to do with AAA or BBB ratings for specific carbon or ESG tokens, maybe combined with also other ratings or integrity initiatives that are out there, I think will definitely help to give more clarity and more quality assessments to the tokens that are out there. I think leading by examples is also a way. Obviously, when you see, Climeworks was a relatively young initiatives promising direct air capture. And at the beginning, I think they had a lot of backup investments or a lot of backing, investments from Microsoft. This really helped them also to establish them as a trusted partner in the industry and, boost their development for the next years. And now it's something credible. And I think there are very few corporate which will doubt in what this company is doing. So maybe we also have to work to convince the few that will then convince the mass. And I think if you talk to Microsoft or some big techs, they are definitely doing great due diligence, which has an impact and an echo in the market. So we hope to see more and more. And I think we've seen Nori in the US, they got commitment from big corporates and some others. So I think these are interesting cases, and we all have to learn from it and see that, yes, it's working and it's bringing real benefits to everybody.
Yeah, and it's good what you're saying, because, we're always very critical and we're always highlighting what's not working, but actually there is a very good progress. And like the same problem is in the media, there are some companies doing something against climate change, and in the end, they get bashed publicly because they invested maybe into the wrong project and they couldn't know it because the data was wrong. So there's also, I think, a need really to highlight what's already going right and where the opportunity is. So thanks a lot for bringing up this example, Lucas, because this really shows there are also new methods which really get a lot of traction from big corporates, and that can be really a change. That can really change happen.
Yeah.
New methods.
I don't know if we deviated from the topic of right. Like
that's why I wanted to moderate this.
Yes.
Yeah. Give me a second. Hey, give me a second to moderate this. So because this was a good segue into another topic that I wanted to touch upon, which is future-based carbon credits, for example. So many of the projects we in the VCM talk about are located in the global south. So people, for example, have some sort of land, have a community, but they don't have access to the sort of capital that we maybe as Europeans are used to. Now I'm interested in if you see any advantages of new technologies in structuring futures carbon credits, for example, where you can funnel the money to a project developer, to a project in the global south, for example. They can start with their project because they have the funding from investors, and then investors that invest in them at the start, for example, of the project, get the carbon credits that are emitted 3, 4, 5 years down the road. Is there somewhere where you can see technologies being integrated and helping scaling up the voluntary carbon markets? Anyone?
Carsten, you want to comment on this one, or Alejandra?
Yeah, sure, I can say something about this. And just to clarify, Max, you mean like forward, right? Not futures, like not betting on the
futures are standardized.
Yeah, there's big potential, and I think it's also needed because lots of project developers, they really struggle to get this first financing in place, and they have to work like a personal money or bank loans, and they're always at a great risk. And I think this is exactly where blockchain technology comes in, because when we have a self-executing contract and a corporate or an institutional investor is investing into a project, and the project can start to work and can record the data like on a weekly basis or daily basis, in one place, it reduces the risk of where's the money going, what's happening with it. But also in another case, we have some kind of automatism in the market that also brings up more planability. So in the best case, a financial investor can bring up like the start investment, then information and data is being gathered over time, and the corporate client who is looking to do an offsetting or plans the offsetting for like in 3 years or in 4 years can already foresee, okay, which amount of credits come up there, and they only need to buy it, or they only get it built when the carbon credit is being awarded. So by introducing this database assurance on blockchain, also to verify it, therefore, future projects can be happening much more better than it is right now, because right now it's just a big risk for any kind of investor, because there's no open database behind it, and no one can really track what's happening in the project. So they see a lot of potential actually.
Yeah, I also see it from the risk perspective. Talking about nature resolution projects, one application of technology, maybe not blockchain technology, but for example, climatic modeling, we use that for assessing how the project is likely to survive or to develop as it should. Like which species the project developer is planting. Are these species going to survive in the future climate or not? So we also take that into consideration or recommend maybe use other species that will be better adapted for drought or for heat or for more rain, depending on the evolution of climate in that part. And also make an assessment of the likelihood of survival, and that helps us to assess how many credits we can expect the project to produce. And also science like net primary productivity, like there's a maximum amount that can be capture of carbon by vegetation in a particular area of the planet. So we know that nothing beyond that is going to be possible. So that's like the threshold. Then we reduce it based on the risk assessment we do. So we implement a science approach, not blockchain, but it's also technological.
Yeah, and I think also in this matter, it's always a combination of blockchain and something like blockchain and IoT sensors, because blockchain is here the layer to make it public and to validate information is right. But actually somehow the data also needs to be collected. So therefore we always need to think about also what is the sensor which is physical and on site.
I mean, I remember that, when some of the first blockchain applications came to life in 2016, 17, and people started to understand what we could do with this, we came across the example of smart contract based insurance or micro insurances, where you can have parametric data such as wind or temperature that automatically trigger smart contract payments for an insurance. And last week we were also discussing with Good Carbon, which is also thinking about forward contracts for their market. So using blockchain forward contract, but also talking with insurance companies that can provide also insurance services together with the forward contracts. So we manage the counterparty risk of this project not executing. Right. And so when you have all of this in mind, right, insurance or micro insurance, smart contracts, data verification, and forward contracts on blockchain with programmatic payments, then you can come up with a lot of interesting value proposition. And I think it goes in the direction of the topic of the call today, is how do we leverage more finance today, maybe with forward instruments, right? I'm not saying they are the best, but maybe they really have a role there. For more projects to actually reduce or capture CO2 somewhere else in the world.
So I know we're coming up on time. I think this is a good question or a good situation to ask or take one of more questions from the audience. So Gianmarco, since you just mentioned finance, Lucas, Gianmarco asked if we think about structuring forwards, for example, that would make carbon credits some sort of like financial instrument that have some additional value apart from like an oil contract, an oil commodity. They can be integrated, they can be structured between two parties, that can be unique, for example. So do you think, and maybe we can make a round for this, that in the future, the way to scale the market, the voluntary carbon market, is to think it through like a financial instrument that has some sort of added value to it and can be structured between parties and have some kind of other interoperability? Or is it something, I think Alejandra, you mentioned that 1 ton of CO2 is 1 ton of CO2, and at the end it's a commodity and you can make contracts over this commodity, but the underlying will still be a commodity.
Need to think about it.
Yeah, maybe then I just start. I think so. Yes, definitely. It's also important to look behind what's behind that 1 ton of CO2. So we're still talking about environment, about piece of land, about biodiversity. So there is a real value, and more we see, okay, we also are using this kind of resource in like our circular economy, and there are more and more business models coming up that are really circular, and therefore it's our resource to also drive our economies. So there is no future economy without our environment. Therefore, there's real value in it. And I think, and maybe it's far in the future, but it will happen at some point, that the valuation of this kind of biodiversity within the forest or the forest itself or specific type of land or our coral reefs and so on, there are countless examples that they will get much more higher value. And then they can also be used as a collateral. And in the best case, we really have a concept of a nature-based currency in place. And I really love to see something like this coming up in the future. So we detach a little bit from our let's say, maybe theoretical finance system we have in place right now, and really start again to value what is really physically our asset we have in the world, because all our economy is based on this one earth, and therefore there's a certain value for it. And I think there will be a revaluation, and therefore we can definitely use it also to structure contracts or to structure loan agreements and so on, because we have here a real asset in place. Currently, it's just not priced yet in the right way.
I completely agree with that. Like, how much would it cost to build the infrastructure to bring water from another country or from another watershed, against how much it would cost to keep just the forest here and how much water it can capture. That's part of the evaluation of ecosystem services.
Exactly. And that's a very good example. I really like that, because it's ridiculous if you see then if in a certain geographical location, a certain nature resource is being used until it's completely empty, there's nothing anymore left. And then this resource, this kind of material or whatever this has to be imported from somewhere from the other side of the world. And this all costs money for sure. So we're basically making it more and more expensive for us to live here in a sustainable way. And therefore, exactly what you said, Alejandra, we just need to value what we have already and then preserve that.
Yeah, that's the biggest challenge. Not only carbon. Actually, there's a new, well, not so new, but not so heard about market. It's not only carbon markets, it's the nature markets. It's much more than carbon. It's getting more mainstream. Slowly, but it's coming.
No, I mean, just to comment on that, obviously, yeah, we see a lot of, again, financial innovations. And if we're really about to tackle financial markets or invite financial markets to participate, obviously it needs to be done in good risk and compliance guidelines and supervisions, because some of these products involve, you know, staking and earning interest and reinvesting the interest somewhere else, and maybe having forward contracts as well. And as we learned recently with the SEC, which has specific use of the Howey test for determining asset as securities in the US, a stablecoin and a staking on stablecoin can be a securities. So how is it going to be from stablecoin backed by credit tokens in 3 or 4 years from now? I think there will definitely be some questions around that, and we'll see more clarity. And if some of those are dealt with securities, and especially we have the infrastructure for digital assets like MiCA, for example, in Europe, and if this enables to, you know, make sure every people involved are doing it as professionals, and it's creating more trust and harmonization in the market, because then we have rules on how to create a prospectus for a specific product, and we inform the investors. Well, maybe then it's good as well. So I don't see it as a bad thing, and I definitely think that some part of the market will be under MiCA and under regulatory status for sure.
Yeah, there is about sorry, coming back to the financial aspect of it. That's also maybe a barrier or a challenge to consider when in tokenization. If carbon credits are used as a financial instrument, there's not only the carbon market regulation, but there's also the regulation for financial institutions, and that's like a whole other world. And it comes with the speculation, like now there's, I don't know if it's a commodity, but there is the future carbon emissions. So we haven't seen it's fluctuating in price. So maybe someone wants to buy now a lot of carbon credits and sell them later when they are more expensive. So there's a speculation part of it. There's also the vintage of carbon credits, like if the project is old, if the carbon credit was issued 5 years ago, it's less worth it than if it was issued 1 year ago. The vintage also determines the price, even if the project is the same. So yeah, there are quite many things.
Well, criteria.
I know we're over time already, but I promised Woodrow from the chat that I would take his question or their question. So I'm going to take this one at least. And I'm getting the feeling, Lucas, that you are reading the chat too, because you hinted at something that they already or they implied in their question.
No, I don't have it.
They said, I know very little about crypto and these markets, but how will you address the risk of these markets collapsing? How do you address the potential for legal activity like with Binance and the FTX? And Lucas, from your answer you posed to the questions before that, I'm getting the feeling that it's going to be regulation. Is it a fair summary? And maybe we can hear a take from the other panelists as a final question.
Yeah, no, I'm happy to offer that question back to one of my colleagues. But so we're talking about risk of collapse of what of the marketplace or of the token that using a specific.
For example, if we have the carbon-backed stablecoin that Carsten just mentioned, and we have this issued on a public permissionless chain, for example, how do we and this becomes the underlying of the global financial system. How do we prevent something like collapsing and bubbles from building?
Yeah, but I think this also relates to what we discussed before, DAO or complete decentralized organization, where it's hard to even say who is responsible, who can we contact if there's a legal dispute. How can we revert a transaction if there's been an error? I think that it will be difficult for that type of model to really go to the mass, especially when we look at industrial players and corporates, which definitely need that for the risk and legal compliance. So the model of pure decentralized Web3 that's gonna take over the entire carbon market, I personally, I know some people believe in it fully. I don't believe it fully. So I think we do need to have a level of control and again, a level of centralization, but not in the bad term.
The level of centralization, Carsten, is that something that you can imagine for your carbon-backed stablecoin?
I think not for the issuance of that coin itself. So we have to see that like a collapse is usually being triggered when a central entity or when a small group of or when a distribution is among only a very small group of people and they have lots of power and they can manipulate the market or can like spread any kind of news and so on. I think the more it's decentralized and the more it's distributed over all shareholders, then the risk of a collapse is sinking a lot. But what we need is this legal framework around it, because right now the issue is for sure that in many countries there's no right to be enforceable. So there's no liability of the token issuers and also for the project developers. And we have this legal framework and I can trust it and I can just order or can just buy this product. Let's say it's just a product. We buy a product from a company, then I need the right or I need the security that I can enforce my right, that I really have the ownership of this right now. This is not given yet. So that's why I say it's a little bit Wild West, but we're getting there with the MiCA and other activities going on. So definitely the legal framework in order to make something like this happening is increasing for sure. And besides this, besides the legal frame around it, the key is really to have a very large distribution among all the shareholders, among all kind of communities. And therefore, the risk is not only on one pillar, the risk is on like billions of pillars. And this will make it possible then.
Alejandra, do you have to add?
Go ahead. No, I mean, maybe actually, I would say the other way around. Maybe token in some, like a token economy model can also save us from the collapse of centrally controlled currencies. Because there are actually a lot of countries where, currency inflation and collapse is creating a great deal of damage, for example, for farming communities. And that's how you saw the emerging platforms like AgroToken and others in Argentina and Brazil that use commodity, so agricultural commodity to back currencies, because it's deemed more stable and brings more stability and security for the farmers than the local currency. So I think we can also start to think about the model a little bit the other way around. And there are good examples. These projects are developing extremely fast.
Yeah, and again, this is real value, which is behind that. So it's backed with real value. It's not only fantasy. And our monetary system right now is a lot based on fantasy. And therefore, yeah, I think there are many options for the future.
Everyone can have their own fantasy. Well, regarding decentralization, I'm not sure about it. But regarding the regulation aspect, I think, yes, it's necessary, it's important, but mainly it should be driven by the people that is involved in this, because sometimes the regulators are not very knowledgeable about the topic, so they regulate without very well. So, for example, spaces like this that ECOTA is creating are very important to bring in the actors together and creating discussion panels, collaboration. And then maybe we can become like an entity, a united force to propose things from our perspective, from the experience we have.
All right, thank you very much for all the compliments for ECOTA. I take this with me and share this with my colleagues. Well, that was a perfect last question, but we're over time, unfortunately, so I have to cut it here. This has been a great discussion. Alejandra, Lucas, Carsten, thank you for being with us today and making this panel such an interesting conversation. Also, thanks to everyone in the audience, for everyone who posted his or her question. I hope you enjoyed this event. You can follow ECOTA on LinkedIn and Twitter so that you don't miss any of our upcoming events. If you're an individual, you can join ECOTA as an expert or as a fellow. And if you're an organization, you can join us as an institutional member and work with us together to decarbonize our future with the help of blockchain technology. Just take a look on ecota.io. There all of the options are listed. So thanks everyone and talk to you soon. Bye-bye.
Thank you. It was great.
Thank you very much. Bye-bye.
Bye.
Thank you. Bye.